The debt ceiling saga is still underway despite market expectations of its completion. The suspense keeps investors on edge, so the stock market is trading cautiously due to a variety of risks. The looming default, stubborn inflation, recession fears, and the long-lasting standoff between the United States and China. Despite optimism, the US stock market closed the week in the red. The Dow Jones slipped by 109 points or 0.33%. The Nasdaq dropped by 0.24%. The S&P 500 closed almost flat. It was 6 points or 0.14% down to close at 4,191. The benchmark stock indexes traded quietly in the New York pre-market, though they managed to reverse upwards. Futures on the stock indexes climbed by 0.06 and 1.2%. The S&P 500 is expected to trade in the corridor between 4,150 and 4,240 points. Wall Street was spooked by the news on the talks about the US debt ceiling. The earlier optimism about the deal was dampened by the news that the talks were halted. Investors were also trying to puzzle out the Fed's agenda for further policy moves. Jerome Powell was uncertain that the extra rate hike would be appropriate because the central bank was still evaluating the impact of the previous rate hikes. Another catalyst for worsening sentiment was the statement by Treasury Secretary Janet Yellen. She told U.S. bank top executives that more bank mergers could be necessary after a series of bankruptcies. The regional bank index fell by 2.17% intraday on a Friday. Morgan Stanley shares dropped by 2.66% after CEO James Gorman announced that he would resign in the next 12 months. Foot Locker shares plummeted after the footwear retailer downgraded its annual sales and revenue forecasts. The warning affected the Dow Jones. Nike shares declined by 3.46%. Under Armour shares closed 4.20% down. All in all, the Dow Jones rose by 0.38% last week, the S&P 500 climbed by 1.65% and the Nasdaq gained 3.04%. The S&P 500 and the Nasdaq looked the strongest weekly gains since the last week of March. Futures on the stock indexes edged down on a Monday, but tried to gain the ground after the opening bell. The reason is China's ban on Omicron, which rekindled the standoff between Beijing and Washington. China banned the major chipmaker Micron Technology from selling memory chips to the country's key industries. As a result, Micron shares slumped by 5% in the pre-market. In turn, shares of other chip manufacturers such as Intel, Nvidia, and Advanced Micro Devices also dropped by 0.4% and 1.5%. Besides, Alibaba shares stumbled by 5% before the opening bell. The debt ceiling drama also made its impact on the market sentiment. President Joe Biden and House Speaker Kevin McCarthy will meet on Monday for further talks. And they had a phone conversation at the weekend with a positive result. Previously, it was proposed to reduce the deficit by nearly $3 trillion through spending cuts and revenue increases. President Biden announced at a press conference that his latest budget proposal would result in more than $1 trillion in extra spending cuts. With only 9 days left to hammer out a deal before cash shortages lead to default. Treasury Secretary Janet Yellen insisted that June 1 remains a hard deadline for raising the federal debt limit and said the chances that the government will raise funds are quite low. Biden told reporters in Japan that he thinks that he can invoke the 14th amendment to the U.S. Constitution to raise the debt ceiling without Congress, but doubts there is enough time left to use that legal theory. The G7 summit at the weekend revealed a few painful points in relations between the West and China. Chinese state media were indignant about the G7 joint communique, which highlighted China's involvement in Taiwan, nuclear weapons, and human rights violations. In addition, the communique called for reducing the supply chain's dependency on the country. And there were more positive notes from the United States. Joe Biden said on Sunday that the G7 does not want to separate from China, but rather de-risk and diversify. And he added that he expects a thaw in the frosty relations with China in the near future. As U.S. high-tech shares based on artificial intelligence have shown strong performance this year, the S&P 500 jumped by almost 10% in 2023 and climbed to the highest level in 9 months on a Friday. Bank of America upgraded its forecast for the index at the year end by roughly 300 points to 4,300, 3% up from the previous forecasts. And this week, the economic calendar contains a business sentiment report for May and inflation data for the United States and the UK, and thus investors are still betting on the Fed putting interest rates on hold. Fed Chair Jerome Powell suggested on Friday that the risk of doing too much versus doing too little are becoming more balanced. Minneapolis Fed President Neil Kashkari said that he could vote for keeping interest rates the same at the next meeting. Fed funds futures suggest an 80% chance of opposing rate hikes in June and still foresee a likelihood of a rate cut by 50 basis points at the year end. Today, investors will find clues to further monetary policy from comments by Fed's policymakers. The PCE price index, which is viewed as the Fed's preferable inflation gauge, will be released on Friday. As for the corporate news today, Apple shares fell by 1% but regained their footing afterwards because Loop Capital cut Apple's rating to hold from a buy. Meta shares declined by 1.5% after the EU regulators imposed a fine of $1.3 billion for sending users' personal data to the United States. PacWest shares rose by 3.3% after the regional lender made a deal on selling 74 real estate construction loans. The currency market traded with minor fluctuations today. Traders are digesting the events at the G7 summit, awaiting the news on the U.S. debt ceiling and wondering about escalating in the standoff with China. Amid the fundamentals, the U.S. dollar index is trading quietly at around 103.20, having grown by 0.04% intraday. It's expected to trade in the intraday corridor between 102.70 and 103.50. The greenback remains steady today ahead of a new round of the talks on the debt limit. Investors are anticipating a meeting between Joe Biden and House Speaker Kevin McCarthy. The US dollar benefits from the pending debt ceiling deal and the Fed's resistance to cut interest rates. Fed Chairman Powell told a central bank conference in Washington on Friday that tighter lending means our funds rate may not need to rise as much to meet our targets, although he reiterated that decisions will be made in line with the data for an emergency meeting. Ultimately, Powell's conclusion is that if the evidence suggests the need for tighter policy, then he won't mind. After Powell's speech, traders cut the outlook for a rate hike on June 14 to around 16%. At the same time, Fed's policymakers Thomas Parkin, Raphael Bostic and Mary Daly, whose speeches are expected after the opening bell, can provide extra support for the dollar index today. The Canadian dollar is opening the week with a subdued mood. Following a 0.04% uptick, the USD CAD pair settled at around 1.35. The instrument is likely to trade to the intraday corridor between 1.3480 and 1.3514. Markets in Canada are closed today for the public holiday. Still, the loonie may trade with the sharp price swings. Oil prices are trading with the minor moves today. Brent crude futures slipped by 0.5% to trade at $75.50 a barrel, and WTI futures edged up by 0.2%. Both benchmark rates climbed by nearly 2% last week. It was the first weekly growth in the last 5 weeks after wildfires in Alberta, Canada's main oil-producing province, have prompted energy producers to pause crude supplies. The International Energy Agency has warned of a looming shortage in the second half of the year, when demand is expected to exceed supply by nearly 2 million barrels per day, the Paris-based agency reported last month. On Saturday, the G7 countries committed at the annual meeting to intensify efforts to counter evasion of sanctions on oil and fuel exports, while avoiding spillovers and supporting global energy supplies. At the same time, the G7 countries have not provided detailed information on how they are going to do this. The crypto market traded sluggishly at midday, but it perked up in the New York pre-market. Bitcoin gained 0.5% to stand at $27,000. Popular altcoins are trading mixed in the pre-market and in the early American trade. Ethereum, Solana, Ripple and Cardano grew by from 1 to 2.5%. Binance and Litecoin dropped by 2.9% and 0.6%. Biden's comments may have pushed Bitcoin down on Monday. The US president said that he would not greenlight cutting budget spending on the support of the poor for the sake of the tax-evading businessmen and cryptocurrency traders, but it was Robert Kiyosaki who gave a serious boost to sentiment in the crypto market. The well-known investor said that Bitcoin and gold remain the best shelter against fraud and incompetence. He advised investors to protect themselves by investing in gold, silver, and Bitcoin. In addition, Robert Kiyosaki, the author of A Rich Dad, Poor Dad, said there would be no soft landing and criticized US lenders for high levels of corruption. Kiyosaki called the current US president the most senile, corrupt and incompetent leader in the history of the country. With all this, Bitcoin, like other assets, risk continuing to drift without a course in the range of $26,500 to $27,500. At the same time, the decision on the debt ceiling can lead to the asset either to fall or rise to $28,000. And that's all for today. We keep monitoring the financial market situation for you. Subscribe to our channel and see you tomorrow.